Good morning, peoples. Let's jump in here to GDX and GDXY. So I owe you a couple of days here. So on 7/29 on Monday, GDX was up 4.44, and we in GDXY in the YieldMax for fund were up 0.76 from 1840 to 1854. So both continued up. And yesterday, GDX was up almost 1%, 0.85, and we were up zero point 0.6 of 1. So they beat us that day, but we beat them the day before. And it looks like the two together, we were up 1.35 and they were up 1.29. So pretty close. All right, so let's take a look at our weeklies and see how our calls look. Well, they look okay. Hang on, I did not add something here. There are 240 more. Oh, that's on the synthetic. Yeah, on a 370, 37.5. So this is now 7,180. No, that's not right. 240. So it is 6805. I knew there was something. Okay. All right, that gets us to the right total. All right, let's jump in and let me share. So again, 36.95 we were up in GDX. Let's make sure that they're getting it on the same row. Okay, no problem with that. So we're 1.49 out of the money and 4.19 on the small lot that's at 38.50. You can see we're close, right? 36.95 and 37.50 with 3 trading days. Now remember that the Fed declares the FOMC, so around 2 Eastern, 11 Pacific, you will get an announcement of whether the Fed has held rates or not. I haven't even looked within the last 24 hours. Clearly, this originally was not going to be a time that they might do a surprise, but I think with some recent data, I think it's fair to call it a long shot. I really haven't read the news, but I still believe there's some possibility. I don't know how they're ranking. And I remember Steve Leisman on CNBC used to always give his take on that. Um, and I just haven't kept up with it between the channel and these funds and research and videos. You know, I'm still trading, I'm still doing a few things, but I don't have time for all the broad details. I just know that the FOMC, has their meeting conclusion, and we'll get an announcement at 2 p.m. Eastern. Okay, so what that means is there's some possibility if they were to rate cut that very likely the gold would take off. Many of the sectors would take off. Even giving a guidance, and we didn't do it this time, but we're watching it. We're pretty sure September we absolutely will, unless something. That even helps the markets, I think. So, okay, here we go. Let's jump over to the other holdings tab. And here's everything dialed up for us. So with the move up, we now went from 120,000 loss to 167,000 gain, right? Because we're actually very close to the 37, right? So let's talk about the trades that they put on, which I meant to do. So when you see over here, there were 50,000 shares that got bought in on the 30th. So they went ahead and did the following orders, right? You can see here that whenever you see a contract amount and there are 3 entries, even if there were other entries, these 3 indicate, okay, they went out to the current synthetic, 37. They bought calls, 240 for $1.79. Since they're right below, okay, once they get above, then they pay more. So usually right at 37, it's closer to a break even, but usually buying the calls is greater. Well, we were $5 under, right? What was the number? What did I say? 390? Or sorry, guys, there's just so many of these. Um, I know we're below it, 36.95. So there's the five. We're 5 cents below $37. The synthetics are $37. So when they do a buy, it costs them 42,000. When they sell the put, now how far out are they going? They're going out to 920. So there is some time premium here. So it's costing them 4,000, something like that, not a whole lot. And then we turn the difference between 37 and 42.9, right? That looks to me like it's 5,760. But we get some money back because we wrote some calls. So this number had been 758, and you add the amount I told you, 5,760, okay, then you get to 764. And we want negative numbers here for our cash flow. And it's out to 920. Now, this number is obviously out of sync. That's the current number right now, the 95. Okay. So when we go over to holdings, or actually, let me take you back here. So down on the bottom is where I show the additional call, right? Because we buy a call for the synthetic, sell a put for the synthetic, then we pick a particular weekly call. And our weekly call only had 4 days remaining. And as we enter today, it'll have 3 days. Well, actually, it'll have 2 days. So when they wrote it on the 30th, it only had 3 full days of trading, right? 31st, 1st, and 2nd. And we collected 30 cents. So we collected $7,200. So we actually collected more than what it cost us on the delta between buying the call and selling the put. That was like 57.60. All right, guys. So where do we stand on these? Again, the weeklies dials it up, right? It just comes down to how far away and what they do. So let's look at the holdings. So I told you we're 167 in the profit. So you can see here, right? We had 389,000 we're winning. Then 2 days ago, we dropped down to 296 in a loss. That was a big move. Then we came back up some to only have 120K yesterday. Now we're up 287 from that, giving us 167,000 gain. All right. So you see the weeklies here. We don't have much of a gain, right? Here we have an 18% gain. You know, we have an 18% loss. We collected 203 and we'd have to spend 241. This little guy, since we wrote that last week, the week before out to 8.2, we were higher then. So by being at 36.95, we've collected 71.75, right? So when we add them, since this is such a big number and this is small, we're losing on our weeklies, right? We collected 221, and if we bought it all back right now, it would cost us 246. Now, this 37.5 is all about the ending price. Any price below 37.5, we buy it for a penny or two. Okay. Anything above 37.5, it starts to cost us money. All right. So that's the scenario on that. How do we stand on our payouts? Well, not great. I mean, we collected a tiny bit more. We went from, total income because this went up from 7 cents down to 6 cents. But that's a positive, not a negative. We need a negative number. This was 36 cents in the piggy bank. This is no money in the piggy bank, right? So we really need another weekly call. We need to win our weeklies and we need to possibly roll our synthetic, right? Our 37. I mean, they're going to pay us some money, but is it 40 cents? Is it 60 cents? It's probably right now somewhere between 40 and 60 cents. I think 60 cents is probably the most we'll get paid. But again, something could happen. We could take off here, get a bunch of money on our synthetic. So for the first 55 cents of moving up on GDX, we're not really capped. All of a sudden at 37.5, we're completely capped. At that point, it's costing us a lot, but we're gaining everything on the synthetic so they stay even. So ideally, you can see that this 167 that we're positive right now is only 12 cents. So we could have only a 40-cent payout. But again, I'm more bullish 3 months, 6 months, 9 months, 12 months, multiple years on GDXY. I haven't really loaded up on it. I've sold my Newmont mining calls for a profit. The earnings, it popped initially, and then on earnings day, it was kind of buy the rumor, sell the news. Now, Anikio, which is symbol AEM, reports after the market tomorrow. That's another big holdings, right? They mine silver and gold. So AEM, Apple Edward Mary. Let's watch that on the 31st. But obviously, the first thing to watch is the FOMC, because if they did a surprise rate cut or a low probable rate cut, then gold's going to go up. A lot of things are going to go up, but gold's going to be one of them that moves up. Um, so the yield could be as low, at a 60-cent payout, the yield's lower, but that's using today's price. Let's say what would happen if they only paid us 40 cents. Well, that would only be a 25% yield. So I imagine it'll be somewhere between 40 and 60 unless we heroically find more money and win somewhere, right? Okay, guys, that's what I got for you. Um, I'm not a financial advisor. This is not financial advice. Have a great one. See you for now. Bye.